All right, folks, we got a Fox Business Alert. My next guest says that the Magnificent Seven are overdone. Write that down, folks. Overdone. I want to bring in now Kingsview Wealth Management, their Chief Investment Officer, also Fox Business contributor Scott Martin. Scott, sacrilege. What do you mean the Mag 7 are done? They're just getting started, my man.
First innings, batting practice. Listen, sorry to be the downer. It's not that they're overdone. It is they're overdone. Let's just all admit it because it's on every front page, every headline. My mom calls me about the Mag 7, Charles, every couple days, so that's a problem itself. So here's the thing, not that mom calls, but that it comes up so much because that's why when you know and you look in the past at other big bull markets, big runs in stocks, when everybody's talking about them, when everybody's behind them, that's usually when the run is coming to an end. It doesn't mean that you got to sell them. I'm just not putting new money there, my friend, because I would wait for them to pull back before I jump in.
But see, you just hit the magic word. You still want to be a buyer.
Because I want to be cool.
I mean, and I think that's it. And the irony, of course, is the pullbacks are shallow. They're short-lived because everyone wants to buy them and they're champing at the bit. You got passive investing pouring billions of dollars a day into the market, all earmarked to go into these same names. So, why not just ride them till the wheels come off, completely come off?
Great point. Until they completely come off. Well, that's no fun, but I'd ride that ride with you anytime, Charles. But I will tell you this. Great point about the sentiment, though, because the sentiment is something to watch very closely. Remember the last two NVIDIA reports as far as quarterly earnings? This was the last one. This was the last kiss. The great story of NVIDIA was coming to an end on one of these two earnings reports. Never did. The market, or the economy, or rather the stock itself, the economy is a little bit better for them, but the stock itself is up maybe, another 10% since earnings. So the point is, watch sentiment, because sentiment will turn on these stocks enough to where maybe this show isn't over, but that's when you got to jump in, not when everybody's talking about them like it's all smoke and mirrors and less than, so let's say.
What about the broader market? Are you looking for a pullback there?
Yeah, a little bit. I think we're going to get some summer doldrums here, Charles. I think you get some economic data that may be a little bit more inflationary, which continues to leave the Fed on pause, but that's a good thing. I'm telling you, they're not even going to cut rates at all this year, and I think the market needs to come to grips with that, but also be help you about
So
it.
this morning we have 4 economic data points. All were misses. Home starts, housing permits. The Philly Fed report was a disaster, and the initial jobless claims higher. And yet what I think offset that, to your point with the Fed, is that prices are going up. We saw that with the Philadelphia Fed report. Prices paid ticking up, prices received ticking up. Is it a mistake for the Fed, in your mind, to be too focused on these smaller price hikes when other parts of the economy clearly slowing at a faster pace?
Possibly, but that backs up their narrative, and I think that's good for them because open market interest rates, Charles, and say the 10-year bond note that you were talking about, say, with Rebecca before, the 10-year bond of the U.S. government, which does pay its bills, by the way, so I don't think we're going to get any default on debt or anybody not buying our debt, just as an aside. But, Charles, the rates on the 10-year note are down to 4.25. We got it right there. Yes, up a skosh today, but down from 5 a few months ago and even at 5.25 some recent months ago. So the reality is that the Fed doesn't necessarily need to cut because the open market rates are doing it for them.
Let's talk about some stock picks here. First, Tesla. You talked about buying some of these Mag 7 on the dip. I guess this is dipped enough for you.
It's a little dip, and I think you got to keep dipping if it continues to dip because, Charles, the whole Elon Musk pay package, the delays in the cyber trucks, the cyber taxi issues, the robo-taxi issues that have all kind of been behind us now, I believe, or at least are baked into where the stock is. 180 or less, 170 would be a great spot to get in here, and we've ridden this one up and down in the past together, my friend.
So Home Depot, Workday making a nice move here. I do have some subscribers in it. I love Workday because of the management, the folks who put it together. Dave Duffel, he was with PeopleSoft, a great guy, a great person. But what are the other reasons to own it?
The fact that it got slammed after earnings and just on some earnings outlook, and as well as just kind of the whole software service thing, they're kind of like figuring out, what the margins are going to look like in that space going forward. I think the market is. And so it's one of those things where if you just take a look at the stock and look where it's bounced in, say, pullbacks past, this would be a great spot to enter, and we have. Yeah.
And, of course, Home Depot speaks for itself, right? I mean, you look up, I don't care how bad it gets hit. You look up a few months later, and that's at an all-time high. It's only got one competitor, and it's a pretty well-run company. Scott, thanks so much, my friend. Let's talk again soon.
See ya.